Why the ultra-rich avoid taxes legally. Imagine a single, unassuming 5-story building in the Cayman Islands housing nearly 20,000 companies. Sounds impossible, right? Yet, in 2020, this tiny address sparked global shockwaves, exposing a shadowy world where the ultra-rich play by different rules. Boardroom Secrets pulls back the curtain on how billionaires and corporations legally sidestep taxes, using offshore financial systems to make their wealth nearly invisible. Buckle up, this is a wild ride through a maze of money, power, and loopholes. This infamous building, known as Ugland House, isn't just crowded, it's a legal mirage. A politician once quipped it's either the most packed office on earth or a front for dodging taxes. Even former US President Barack Obama called it one of the biggest tax scams in history. But here's the kicker, it's not illegal. Welcome to the world of offshore banking, where the ultra-wealthy and multinational corporations exploit international laws to shield their assets, transactions, and identities from scrutiny. How do they do it, and why does it matter to the rest of us? Offshore banking involves individuals or companies stashing money in banks or financial institutions outside their home countries. These hubs, called offshore financial centers, OFCs, like Switzerland, Hong Kong, Singapore, Luxembourg, and Caribbean islands, offer a tantalizing trifecta: ultra-low or zero taxes, ironclad secrecy, and lax reporting rules. No income tax, no corporate tax, and your name stays out of public records, sometimes even hidden from the bank's internal files. Over $10 trillion, more than Japan's GDP, the world's third-largest economy, is parked in these centers, accounting for 8 to 10% of global household wealth. It's a financial underworld designed to attract the world's richest. So how does it work? Unlike ordinary workers whose paychecks are taxed up front, the ultra-rich don't hold assets in their own names. Instead, they use complex structures involving shell companies and trusts. Picture two people: James, a New York CEO earning $1 million a year, and Mike, who earns the same but plays the offshore game. James sees nearly half his income vanish to taxes in a high-tax state. Mike, however, sets up a trust in the Cayman Islands, which owns a parent company in Luxembourg. That company holds intellectual property, like software Mike developed. When the software sells, profits flow through a web of intermediaries in low-tax jurisdictions, landing in Mike's pocket as dividends or profit distributions, taxed at near-zero rates. Legally, Mike owns nothing. He's just a beneficiary, free to decide when and how to access his wealth. While James forks over $500,000 in taxes, Mike keeps almost everything. It's a masterclass in turning laws into tools for wealth preservation. This isn't just a game for individuals. Corporations play it on a massive scale. Take Apple, the poster child for legal tax avoidance. In the 2000s, Apple set up ghost companies in Ireland, entities with no employees or physical offices, existing solely to funnel profits. By exploiting a now-closed Irish tax loophole, Apple routed over $120 billion in profits from Europe, Asia, and Africa through these companies from 2003 to 2013. At one point, their effective tax rate was a jaw-dropping 0.05 cent, just $50 in taxes per $1 million in profit. In the US, this would have cost them $40 billion, but they paid a mere $600 million. The European Union cried foul, and after a decade-long legal battle, Apple was ordered to repay $14 billion in back taxes in 2024. But Apple's not alone. Google, Amazon, Meta, Nike, Starbucks, and Microsoft all use similar offshore structures. The OECD estimates 40% of multinational profits are shifted to low-tax havens, costing governments billions. Why does this matter? It's not just about taxes, it's about power. The ultra-rich use a 3-layer system to stay untouchable. First, they create shell companies in places like the Cayman Islands or British Virgin Islands, paper entities with no real operations. A $150 million yacht, a mansion, or a bank account is registered to the company, not the individual. If authorities come knocking, the owner can shrug and say, "I don't own anything." Next, these shell companies are owned by trusts in another low-tax jurisdiction, like Jersey. The trust's creator isn't the legal owner, just a beneficiary, further distancing them from the assets. Finally, to spend this wealth without triggering taxes, they borrow against it. Instead of repatriating profits and paying taxes, they use offshore assets as collateral for low-interest loans. Since loans aren't taxable income, They access cash without a trace. This buy, borrow, die strategy lets them live lavishly while dodging taxes, even passing wealth to heirs with tax breaks. Take a real-world example. A billionaire buys a private jet through a Cayman shell company owned by a Jersey trust. They borrow against the jet to fund their lifestyle. When they die, the trust settles the loan and the heirs inherit the rest, often tax-free. It's a financial fortress, shielding wealth from taxes, lawsuits, and seizures. But it raises a burning question. Where's the line between clever tax planning and exploitation? Tax avoidance, using legal loopholes to minimize taxes, isn't the same as tax evasion, which is illegal. Claiming business expenses like client dinners is avoidance. Hiding cash income is evasion. The ultra-rich, backed by elite lawyers and accountants, have turned avoidance into an art form, blurring the line between legality and ethics. This system fuels inequality and starves public services. While ordinary workers pay taxes on every dollar, the ultra-rich keep billions out of reach, forcing governments to cut budgets or raise taxes on the middle class. Yet cracking down is tough. Closing loopholes in one country just pushes money to another. The OECD and EU are fighting back with stricter rules, but the ultra-rich are always one step ahead, with armies of advisors navigating the global financial maze. Boardroom Secrets exposes this hidden world where wealth buys freedom from accountability. The ultra-rich don't just play the game, they rewrite the rules. Will governments ever level the playing field, or is this just how the world works now? Stay tuned for more revelations on how power and money shape our future.